Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large-cap growth and also one of the best-performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance. Ryan, it's great to have you back.
Thanks, Jill. It's great to be here.
All right. So much flies by since becoming a daddy, doesn't it? Let's talk. Really, since the beginning of August, time really flies by. We're going to be heading into Q4 shortly. Let's start where we are right now with some weekly performance updates on the Qs.
Yeah, so you look at QQQ and QQQM down 1.83%. They underperformed the S&P 500, down 1.66%. Underperformed the S&P 500 Value Index, which was down 1.34%. I mean, a lot of risks there. You have the Delta variant concerns continue. Numbers seem to be marginally improving, but then you got to couple that with the markets trying to digest a lot of this taper talk. You look at value, though; they were aided by the energy sector. Crude oil continued its march higher. It's up over 16% since the August lows, which were hit on August 20th. You have effects from Hurricane Ida. You have the reported decline in U.S. stockpiles. Both of those things buoyed prices, and continued vaccine distribution could boost demand. That was disseminated from comments by the IEA. But speaking of comments, you look at Jerome Powell's comments from the end of August. They mentioned tapering by the end of this year. Noted that the inflation is still kind of right around their 2% target, or healthily over their 2% target. But on the employment front, still some room to go to meet the Fed's dual mandate. So, since Powell's comments back on August 27th, you've seen QQQ outperform the S&P 500 by over 1%. Since that time frame, QQQ has surpassed the S&P 500 in terms of year-to-date outperformance. So it is interesting to see, as you see Powell talking about tapering and maybe not this abundant economic growth that we experienced over the first quarter and first half of the year, does almost shift the focus back to QQQ growth-oriented companies. I think in terms of other economic data points to look at, the inflation push-pull story continues. We had CPI for August come in yesterday at 0.3%. That was less than forecast, down from 0.5% in July. But last week, you look at producer prices in August, higher than forecast. And, I think all of this centers around the Fed had previously circled the expiration of jobless benefits, which happened last week on September the 6th. People going back to work could help ease some of these supply chain issues that have persisted. The chart that's up now shows continuing jobless claims that have been in steady decline since that initial spike, kind of in the early stages of the pandemic. But it's interesting to note that in the week ended August 27th of this year, it's still 66% higher than the same period 2 years ago in 2019. So I think that's a metric that's going to be interesting to keep an eye on. It is a 2-week delay, though, so there's nothing really easy in this business. But at any rate, you have a lot to digest between all the stuff that I just went through, higher rates, debt ceiling debate, a $3.5 trillion budget proposal, vaccination, boosters, Delta variant, more. The fall is shaping up to be pretty exciting.
And Ryan, when we take a look at sector performance, we actually saw a little bit of a rotation here, where it was a couple of other sectors that actually outperformed technology and the usual suspects.
Yeah, really just nowhere to hide, right? I mean, it was what was less bad. I think energy, frankly, was maybe the only place to hide, up marginally in the S&P 500. Recall, QQQ does not have exposure to energy. But really, you look at the overweights for Qs, discretionary communication services and tech. That's what weighed most on the fund. But I think when we look at tech, you look at some individual company statistics. Microsoft is up today. Microsoft is now the second largest company in the world with a market cap of over 2.2 trillion as of a few hours ago. It announced a $60 billion share repurchase program, the largest in its history, represents over 2.5% of company value. It increased its quarterly dividend by over 10%, or 6 cents to 62 cents per quarter. I noticed it increased its dividend every consecutive year since 2010. So 2008 and 2009, the dividend did not change. Good for a 5-year dividend growth of just over 9%, 3-year dividend growth of 10%. But I think this is a really good example of how the 21st century industrials like Microsoft continue to return value to the shareholder in ways that, a growth-oriented company of years past likely would not have done.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.